Opendoor stock closed Tuesday session at $7.97 per share, down 19 cents or about 2.33% from the prior day. At first glance, a small red day might look like hesitation, but when you look a bit deeper, it's more like preparation. The stock spent most of the day trading in the green, flirting with the $8 mark, and even reached as high as $8.48 intraday before giving up some of those gains later in the session. What this shows isn't weakness, it's positioning. Investors were adjusting ahead of a big event, the Federal Reserve's next rate decision, which comes tomorrow. That decision has wide implications not just for the economy but particularly for companies tied to the housing market, like Opendoor. The other factor is the company's own upcoming catalyst, its earnings event, the Open House, where management is expected to outline the next phase of Opendoor's transformation. So right now, we're in that quiet moment before a potentially pivotal few days. The company itself hasn't made any new announcements, but the market is already starting to build a story. Let's start with the technical picture. The move between $8.48 at the high and $7.97 at the close suggests both conviction and restraint. Conviction because the stock pushed above that $8 line again. Restraint because it didn't fall apart when traders took some profits. When a stock trades up into a new price zone, then holds rather than collapsing back down, that's often the start of a new base forming. You could call it a pressure build, buyers and sellers battling for equilibrium before the next leg higher. It's easy to see a red close and assume the enthusiasm is fading, but what's really happening looks more like consolidation before a macro event. And that kind of consolidation is exactly what long-term holders like to see. Now let's talk about why this setup is so interesting heading into Wednesday. All eyes are on the Federal Reserve. Markets are expecting another rate cut, or at least a dovish tone from Jerome Powell. That's the kind of language that could spark another wave of optimism in housing-related stocks. Lower rates translate directly to lower mortgage costs and improved affordability, which helps increase transaction volumes, and that's the oxygen Opendoor breathes. When people move houses, Opendoor thrives. When the market freezes and nobody moves, the business slows. So a potential rate cut or even softer tone from the Fed could act as a direct tailwind. It's no surprise, then, that traders may be hedging or trimming exposure ahead of that announcement, not because they're bearish, but because they're managing risk into uncertainty. At the same time, Opendoor's own story continues to mature. The company is deep in a transitional phase, pushing forward with its artificial intelligence and pricing model work, refining how it sources and sells homes, and preparing for what could be a new era of efficiency. We've seen Nejatian, the company's CEO, become increasingly vocal and confident online, engaging with shareholders, talking about automation, and highlighting how machines can outperform humans at pricing. That's not just optimism, that's a vision of scalability. And when you combine that with macro support from the Fed and a clearer direction internally, you get the sense that Opendoor could be setting up for something larger over the coming months. Now, let's look at sentiment. Despite this small red day, optimism among long-term shareholders hasn't wavered. We've seen major voices in the Opendoor investor community, including Eric Jackson and Anthony Pompliano, continue to advocate for the company's mission and highlight its long-term potential. They're not rattled by day-to-day volatility. In fact, that stability in tone is helping anchor the stock's base. The fact that the stock has been trading steadily around that $7 to $8 range for several weeks now tells us the market has found an equilibrium. It's almost like the stock has been quietly digesting all the new leadership moves, investor commentary, and AI announcements, waiting for the next spark to ignite momentum. The good news is that we're now in the catalyst zone. The next 10 days bring three major events that could set the tone for Opendoor's next move. First, the Federal Reserve's rate decision, which happens tomorrow. Second, next week's housing market data, the September report, which is expected to give us a clearer read on how the property market has responded to recent rate changes. And third, the company's own open house earnings event, which will give investors a first full look at how the new leadership team is executing on its plan. Each one of these events has the potential to create movement. Together, they could define the stock's next trend. If the Fed stays dovish and the housing data confirms continued resilience, Opendoor will likely find itself in the sweet spot, an improving macro backdrop with a clear internal execution plan. That combination could act as the perfect launchpad for a rally into the end of the year. But of course, we also have to keep it real. If the Fed unexpectedly takes a harder tone, or if the housing data comes in weak, the short-term reaction could be choppy. That said, when you look at how far the company has come in just the past few months, it's clear that the foundation is stronger than before. Kaz has built a leadership team that blends experience from companies like Shopify, Amazon, and even the world of AI startups. We've seen more operational discipline. We've seen an openness to cutting waste, trimming software costs, and deploying AI tools internally to make better decisions. And those aren't just cost-saving measures, they're structural improvements that set up the company for sustainable growth once the macro winds turn favorable. So while the near-term story might hinge on the Fed and the next earnings call, the long-term story is that Opendoor is rebuilding itself into a leaner, smarter, more tech-driven company. From a technical standpoint, the chart remains constructive. The $7 mark continues to act as a reliable support level. Every time the stock tests it, we've seen buyers step in. That kind of consistency builds investor confidence. The next breakout zone remains between $8.50 and $9, the same zone that has capped previous rallies. If the stock can push through there on volume, it could open the door to double digits again. The key thing for investors now is patience. The setup looks like accumulation. The volume pattern supports that theory. And the leadership narrative keeps getting stronger. The absence of panic on red days, and the steady buying interest on green days, tells us this isn't a speculative churn anymore, it's the early phase of a potential turnaround trade. Heading into Wednesday's pre-market, the main focus will be on futures reactions and sector correlations. Watch how housing-related stocks behave, how mortgage rates move in the early trading hours, and whether the broader market seems to expect a dovish or hawkish outcome. For Opendoor specifically, stability is bullish. Even if the price doesn't move much ahead of the Fed decision, the key thing is that it holds that $7 base. If it does that, and we get a favorable decision, the next move could be quick. This is a company that has been written off multiple times by traditional analysts, only to keep adapting and re-emerging stronger. From the early days of being an iBuyer facing macro headwinds, to now positioning itself as an AI-first real estate platform, Opendoor continues to evolve faster than people expect. So, as we head into the midweek sessions, this is the time for conviction. The stock stability above $7, its measured approach toward $8, and its growing list of bullish voices in the community all signal the same thing. This is not a fading story. This is a stock biding its time, waiting for the next catalyst to open the door to its next chapter. Whether that door swings open after the Fed's rate cut, or whether it takes the company's open house event to spark it, the signs of life are already here. So stay focused on the broader picture. Short-term noise is inevitable, but the fundamentals, both internal and external, are aligning. This week could mark the beginning of a shift in sentiment, not just for Opendoor, but for the housing tech sector as a whole. The message for investors is clear: volatility isn't always your enemy. Sometimes it's the quiet before the breakthrough. And with the macro winds potentially turning, Opendoor's transformation story, from survival to scale, may just be about to enter its next phase.